Tesla stock was dinged about 2% today due to a mixture of different things going on. First of all, you did get Robin Denholm that sold about 85% of her entire stake of Tesla. She is the head of the board at Tesla itself, and that's not exactly comforting for investors. There are some fears about what could happen on Wednesday with CPI and the Fed, as well as overall hedging heading into Tesla's main event this upcoming Thursday. I am here to break all of this down for you and put it into context what this means. If you are confused, feel free to hit that comment section and write your comment and somebody will answer you, probably myself. So Tesla stock was down about 2% today, but in the grand scope of things, that's what I'm expecting. I'm expecting Tesla is going to stay anywhere from 172 on the low side to about 180 on the high side heading into Thursday. Now, Wednesday with CPI and the Fed, that could obviously cause a larger move, but Tesla's been in this range for a while, and I think it'll stay in this range for a while until you see a big breakout or a big breakdown on Thursday. It does appear as if Tesla has all of the votes they need, as long as retail investors actually go out and vote, to pass Elon Musk's 2018 comp package. And if that comp package is actually approved, there could be anywhere from 150 to 250 million shares that could be covered by the shorts. That is because, based on my estimates, you have about 3 to 4% of the outstanding float of Tesla currently sold short by market makers. And this is because big institutional investors, they're going out and they're hedging their portfolio. And the way that they're doing that is they're going out and they're buying 250 puts, 260, 270 puts. We've reported on this for many days now. In fact, if you take a look at today's option flow activity from Big Money, you'll see a load of these options. A June 21st 230 put worth 8 million, a June 21st 276 put worth 6 million, a June 21st 276 put worth 8.63 million, a June 21st 320 put worth about $2.5 million, and a June 21st 276 put worth $3.5 million. The list goes on and on and on. Look at this one. This is a big one. We got a big boy here. A June 21st 276 put worth $24 million. These are not bearish trades on Tesla. These are hedges. These institutions that are buying these options, spending $24 million on these positions, they are using options for precisely what options are meant to be used for, and that is to hedge a larger position. Based on all of this hedging activity, that really tells me one thing, that again, this Thursday is going to be the biggest day for Tesla in many years. We can almost say that with a definitive fact. But the other thing that it tells me is there's a lot of shorts on Tesla stock, not just the overall short position that is about 105 million shares, but there's probably about that same number in just short duration market maker shorts that don't get reflected in this number. So basically how it works with market makers when they go out and short a stock is it's a very fluid position. That's why they don't report their short positions, because that can change on a day-by-day basis or minute-by-minute basis. It depends on the option flows. Now, who's going out and selling 250 puts and 300 puts, right? Not Big Money, not institutions. That is the market maker's job to make a fluid options market. And when everyone goes out and buys those due to a specific event, well, that causes market makers to short a lot of stock. If indeed Elon Musk's comp package is reinstated, that will cause market makers to go out and potentially buy 100 million shares almost instantaneously, because these puts, the break evens are like nothing. So So for context, these 276 puts expiring June 21st, which are one of the most popular hedges right now for Tesla. You have open interest of 2,000 and volume of 5,500 today. The break even is 0.1%. So if the stock falls 0.1%, the market makers have to go out and short more stock. And this has been happening for days. And Tesla has, fallen the last couple of days, you could say, from the 181 level to where we are now at 173. There has been a ton of shares that have been shorted via the market makers in just the past couple of days. Now, what happens if Tesla stock goes up 0.1%? Then market makers have to go out and buy all of those shares back that they have already shorted. And that is where you get into a potential scenario that could cause Tesla stock to rally 15-20% coming on Thursday. Of course, that would assume Elon Musk's comp package does get reinstated, and clearly I am not a financial advisor and I am not a financial planner. Tesla stock could easily fall 10+% as well, so it's important that you come to your own conclusions and do what's best for your portfolio. If you feel uneasy about your position, buy a put. It's as simple as that. I'm not going to be mad at you. Maybe you will be mad at you if the stock goes higher, but at least you have downside protection. Now, I'm personally not doing that, or at least I don't plan on doing that right now, unless it were to look like there's a strong chance that Elon's comp package does not get reinstated. Then maybe I would buy a put, right? But it's just insurance. And I still think there's roughly a 75% chance Elon's comp package does get reapproved. But as I said in the last video, it's really going to come down to BlackRock and Vanguard that collectively own about 13% of Tesla, whether or not it, gets approved or not. We did get some good news though. One of Tesla's longest standing shareholders, Bailey Gifford, who owns 0.56% of all Tesla stock, around $3.1 billion, will vote for the reinstatement of Elon Musk's 2018 compensation package, according to Bloomberg. And yes, that does make quite a difference. Ron Barron's fund owns 0.5%. That individual, Bailey Gifford, owns another 0.5%. That's 1% of Tesla stock that's already voting for this proposal. And I do think a lot of other hedge funds, institutions, and money managers are also going to vote for this because, that's almost like self-sabotaging your investment. You also have the markets that are quite jittery heading into Wednesday alone, and that definitely didn't have a positive effect on Tesla stock either today. You can see markets are jittery not by the headline index move today. The Nasdaq was up 0.35%, Russell 2000 even, your most sensitive index to any negativity from Powell, was up 0.25% today, but it was actually the VIX that told all that was up 4.26% today. That's a pretty big move higher for the VIX, especially when the indexes were green. The VIX, when it's green, means that there is more puts being bought on the S&P than calls. And in fact, if you take a look at this Friday for the S&P 500 options chain, you do have about 80% of the open interest puts and about 20% of the open interest being calls. And the contrarian that I am would say that maybe if 4/5 of everyone is buying puts on the S&P, maybe that actually means we could rally after Wednesday. And sure, maybe see some weakness heading into Wednesday. Now, the dot plot is going to be the most important part of Wednesday. This is where Fed officials plot down their estimates. And most notably, the last dot plot was March 20th of 2024. That was 3 CPI reports in a row that we had higher inflation, right? So the Fed was still pricing in 3 rate cuts at that time. Now, some time has passed from March to where we are now, almost 3 months. We have had 2 CPI reports that have declined back to back. As long as Wednesday's CPI report continues to show that disinflationary process is continuing, you could be in for a more dovish or bullish dot plot than what the markets are currently expecting. Also, what will be important to watch is the unemployment rate for 2024, the expected rate from the Fed, because at the December summary of economic projections, the Fed actually had 4.1% plotted in for 2024's unemployment rate. They lowered that to 4% March 20th of 2024, and you're already at 4%. So do they raise that again? That could be an indication of some kind of harder landing. Same is true with GDP. The December summary of economic projections, the Fed was expecting 1.4% GDP. They raised that to 2.1%. Do they lower that again and raise the unemployment expectation? That could have implications for the path of the economy throughout the rest of this year. And then obviously it will be important to see what the Fed is expecting for the federal funds rate by the end of this year, which I think could give us a dovish surprise if the Fed is still expecting to cut rates 2 or 3 times. Let's also remember that major economies, central banks tend to move in tandem, and you've seen the Bank of Canada last week as well as the ECB already lower rates, so there's probably going to be more pressure on Powell to cut rates as well. And overall, this could have a positive impact on Tesla stock. Again, I'm not expecting too big of a move until Thursday, but especially after Thursday, if Powell's dovish, the shareholder meeting goes the way we hope and Elon's comp package is reinstated, that could just add more bullish fuel to the fire, if you will. But then again, there's a chance that Elon's comp package does not get approved and the Fed is more hawkish than expected, and well, that could be overall bad news. We have really 3 big earnings of this week: Oracle, Broadcom, and Adobe. Oracle reports earnings tomorrow and after hours, and that's mainly your event for tomorrow. We do have the NFIB Business Optimism Index, and considering where we are right now, and the consensus is kind of mixed between how strong the economy is going to be throughout the rest of this year, whether or not we are heading into an actual slowdown. That could be a little bit more important than it typically is, but we'll have to wait and see. Tomorrow at about 1 p.m., you'll also get a 10-year bond auction, and those do tend to move the markets quite a bit, especially heading into the Fed. Depending on where investors set that yield, that could tell you a little bit more about the next day, which is Wednesday, the Fed meeting, CPI, and so forth. But again, really, when it comes down to Tesla stock, I'm not going to change my opinion here unless something really, changes between now and Thursday. I'm expecting Tesla stock will go higher. Now, do what you guys want to do. Sell your Tesla stock for who cares, right? Buy a put, don't. Buy some calls, doesn't matter. This is not financial advice. You will probably lose money if you trade options. About 85% of options expire worthless, okay? But, I mean, just be comfortable with whatever choice that you are making, because I think we're going to see a big move. If you know yourself and if you sell Tesla stock because you're nervous and the stock goes up 20% on Thursday or Friday, if you know yourself and you know you're going to be mad at yourself, then probably don't sell Tesla stock. If Tesla falls 10 or 15 or 20% on Thursday or Friday, and you'll be mad at yourself for not selling Tesla, then maybe sell Tesla. I think it really just comes down to what you are comfortable with, but just know there's going to be a very large move. So I don't know what's going to happen necessarily, but I do know one thing. It's going to move a lot. Again, I think Tesla could really end the week above $200 per share, as long as the vote does go through and as long as the Fed is not super, doomy as far as the economy and a recession, as long as the Fed's not steadfast on not cutting rates, that higher for longer narrative, then I would expect Tesla could be over $200 by the end of this week. If the vote does not go through and the Fed is maybe a little bit more on the hawkish side, then you could end the week in the, low 160s, 150s. That's definitely a possibility also. So let me know your opinion on this, your thoughts on this, and what your plans are from now until Thursday. Do you plan to hedge? Are you selling? Are you buying more? Are you buying calls? Do you think this is a good opportunity for an upside trade here? I would love your opinions down below in the comment section. As Fundstrat says on X, May CPI and June FOMC, both Wednesday of this week, are likely viewed positively by equities. Equities positive 5 days later, 5 of the last 6 FOMC meetings. They say overall this Wednesday is a very important day and week really for the macro, and they remain constructive on stocks for the month of June. See this morning about markets over the next couple of months.
Look at the markets. Joining us now ahead of the opening bell, Ryan Dietrich, Chief Market Strategist at Carson Group. After a great year last year, people thought maybe a reversion to the mean this year. So far, so good. For 2024, more to come in the second half. Ryan?
Yeah, Joe, good morning. Thank you. And go Cincinnati Reds. As hot as the Reds are, the market's just as hot, Joe. You think about it, listen, May is usually not that great. And we just had a really good May. What I think people need to know, Joe, is that could be a signal, right? When you gain more than 4% in May on the S&P like we just did, June is higher 8 of the last 10 times. But more importantly, the rest of the year is up over 10% on average. Just double the at any time returns. That's just one signal. I get it. But, Joe, we're still seeing clues. I've come on with you guys for a long time now. So this is a bull market. We're not changing our tune. We still think second half of this year is going to be pretty darn good.
The S&P next year is expected, in your view, to earn what, Ryan?
Yeah, well, this year they're expected to gain 11% right now. We think it could gain about 1% or 2 more. Even then you go into 2025. Then, I mean, it's expected to be low double digits there. We think, again, a surprise can happen. I mean, people keep doubting this market, but again, what have we seen, right? I mean, just last week, Joe, on a pretty good upside, what happened? Put to call ratios go higher. Some of those sentiment polls became a little more skeptical. I mean, that kindling is still there overall for a summer rally. One more point. These 3 months we're in right now, June, July, August, in an election year, where last I checked, we are right now, usually pretty strong. So we think a summer rally still makes a lot of sense, Joe.
You'd prefer earnings continue to rise, or you could prefer a little bit of softness that allows the Fed to cut, or you'd like both?
Yeah, wouldn't we like both? I mean, you think about it, though, we're seeing that, right? I mean, we're seeing the softness. Just last week, you look at the ISMs, right? The ISMs, like manufacturing and services, both prices paid came down. Unit labor cost prices came down. So we're seeing some positives. And then again, the underlying pinnings of this strong bull market and this economy we're seeing, we don't see any major cracks. Other cracks, of course, there are some cracks. But overall, earnings are still strong and inflation's coming back. We think the first cut will likely be in September and one more in November from the Fed.
There are people that say this is still the breadth has not expanded enough, and you think that the soldiers come to meet the generals. You're not worried that this market's been propped up by the Nvidias and the Magnificent Sevens of the world?
That is a great point. And just 2 weeks ago, across the board, we were hitting new all-time highs or 52-week highs in various advanced decline lines. So, yes, believe me, we'd like small caps and mid caps to participate more. But we think that's the case. We think that's probably going to happen. I know other guests have pointed this out, but you look at PE multiples, small caps relative to large caps are as cheap as they've been since the late 90s. They had a 13-year outperformance. I mean, it's going to start right now, but we do think small and mid caps probably do pretty well the second half of this year as things do overall expand.
All right, Ryan, we've got less than a minute left. We appreciate it. We're going to take a quick look around the markets before we go. Ryan, thanks.
So with that said, let me know what you think about all of this information down below in the comments section. You guys have a fantastic rest of your day, and I will see you in the next one.